is someone does a search for a charter flight. I really want AI to look at the entire marketplace and say, all right, here's the best medium-sized airplanes for this mission because you're only flying 2.5 hours. You have 4 people. And then looks at a schedule and says, all right, here's a 4 corners airplane. It's showing available over these dates. It's showing 2 pilots. Here's the gives you the average market pricing. You say, yeah, that's okay. It goes right to 4 corners, says you show an airplane for this trip. Client wants to book. You say, oh no, that those 2 pilots, that one pilot actually just broke his leg. He's not available. AI should then go, boop, here's the next one. Here's the next airplane. Here's the next 2 pilots, and work its way through. Instead of the process of what we have right now is you send a request, I call 5 people. Oh, this one books. Oh, I got to call the owner. Oh, that owner. Okay, now I'm going back. Like, that's really what I want AI to do. And then when I say, oh, Susie's not on this flight, Steve is, I don't want a person going in, deleting Steve, typing Susie's name in. That should be a simple AI tool that AI removes this from the manifest, adds that person to the manifest. A lot of those simple tasks, that's really what I'm hoping we can get to from an AI standpoint. Let the really good minds in an aviation space make those important, difficult decisions, safety decisions, service decisions. Let the AI do kind of the simpler stuff, scheduling, simple updates. That's what I'm hoping AI gets to.
Yeah, and I mean, I think AI can do that. It's just a matter of how fast and how the industry will adapt to it.
Yeah.
And because it's there.
Because our industry is really good with technology adaptation, right?
It tends to be, actually, but it's not good with idea adoption, and part of that is driven by just some of the restrictions and constraints that are systemic versus sort of at the end of the day, some of the our IT brethren in other industries don't have to deal with the regulatory environment that we have to deal with, and so that creates complexity. And it's it'll be interesting to see how AI can deal with the differences in quality of delivery, and where you've got 2 different companies, the 2 companies can have the same airplane with the same pilots with similar types of backgrounds, and today to call one company and not the other just because of the quality of the management team and the way that they maintain the planes and how all that fits together. And so part of what will be hard with AI is how do you treat the operators not like commodities, because there's a very very big difference between operators out there, and you guys have worked for a really good company in the past and do things really well, and there's a big difference between the resources that a firm like Four Corners can bring to bear, or got places where you've worked, versus some of the other people out there that are much less well capitalized.
That's always been an issue I've had with a lot of the booking apps. Is when you search for a New York to Los Angeles flight and you see 5 different G4s from 5 different operators and they're all within a similar pricing range, how do you make that decision on what's the difference, who's maintaining these airplanes, it doesn't show you the pilot rating, it doesn't show you on time deliverability. It's just that gap from being able to book that airplane, to really understand the differences in these operators. We're still pretty far away from an online booking. That's, I guess it's a good thing for a guy like me, where someone, and really for a company like yourself, where people need to pay for your expertise.
Right. Yeah. And I think in the short run, when I say that, I don't know how many years that is, but in the form of years, that's going to still be important. It's interesting. This morning, I was actually doing an interview with a guy who works at one of our competitors, and he wants to come over here. And he relatively new to this company. It's a floating fleet provider, and he's brought new clients over from a charter perspective into their program, and he's had situations where the operator has elected, where he's got a client booked on a flight on a plane, and the operator has elected to take a more profitable trip to support more of a wholesale type of charter than to fly the retail one that he's booked and that his reputation is on. And so there's still a lot of those shenanigans kind of going on in the marketplace, and it makes it really makes it hard, because you work really hard to develop client relationships, and then you've got operators who are not behaving well, who will violate that trust, and then they'll call you and say, well, the plane is broken, and then you go in FlightAware and you see that it's flying a different flight, and that fool me once, right, but not fool me twice. And so it's one of those things where the industry still has a long way to go, and AI, I think, can do part of that, but I still think in the short run, and measured in years, it's going to still be an environment where you have to have the relationships and the market knowledge.
Mm-hmm.
Brian, on that note, it seems like there's, throughout the history of Mente and Four Corners, now Freedom, and this strategic evolution, it seems like I keep thinking of the word control, where in an industry where there's so many variables and there's so much kind of static that's very tough to work around, it seems like you guys have done such a good job of continuing to create points of control in the space. How do you think about that? I mean, why has that kind of led you to some of the decisions of starting different departments and really honing in on specific aspects of each?
Yeah, for us, it's really not about control. It's interesting you say that, because I've never really thought about it that way. Really, it's more about, focusing the business around the client and what's important to them. And frankly, every product that we've ever developed, our clients told us what they want. And we just looked at the industry and said, wow, there's a really good opportunity there. And so, on the Mente 360 side, that's our retained consulting program. That actually generated from a conversation I had with the director of aviation at a Fortune 20 company. And he was explaining a product that he wanted, and it didn't exist in the marketplace in the form that we ultimately settled on. But really, it was kind of, trying to meet a demand. And now we've got, close to $1 billion of assets that we give, quarterly updates and real-time updates, but, minimum quarterly updates to our clients on really what the value of the airplanes are. And the same thing with Freedom. That came specifically from a meeting with the CEO of a publicly traded business, and it's taken a while for us to kind of get there. But the cool part about it is that it's something that people want, and so the idea here is not, I guess, control is what it looks like, but really it's kind of figuring out what the clients want, what they're telling us, and then trying to create and solve problems for them. And that's, at the end of the day, that's where I think we've been successful. And had another interview this morning, different guy. We're hiring a bunch of people right now. And part of it is, there are a lot of Brianisms that float around here. And one of them is that, we're never hiring, but we're always looking for talent.
Mm-hmm.
And that, nobody in the company works for me or anybody else, any of our other managers. At the end of the day, we all work for our clients. And if we keep their interests first and provide a good service, then everything else will fall in the line. And that's the continued focus. And it's hard, especially as you scale. You guys are starting a new business and, have been at it now for 6-8 months, would be my guess. Something like that.
A little over a year.
A little over a year. So congratulations. That's awesome. And if you don't keep your clients' interests first, then it's going to be hard to build that repeat clientele. And here we call them raving fans. And everybody in the company, from day one, we start talking about creating raving fans. And ultimately, that's been part of what we've been successful at. The other part is hiring good people, but it's really about creating those raving fans and then getting the repeat business, because that's absolutely critical to what we do.
Yeah, that was one of the main parts of why we started this business. We just saw the customer service, especially in the charter industry, really decrease. And maybe it was because they couldn't handle volume, or people were getting greedy, or I'm not sure exactly why there was such a decrease in the customer service, but it was large.
Mm-hmm.
People just stopped caring. Situations like you explained earlier. And that was kind of one of the driving forces of, hey, our value to clients was that, that expertise, but also making sure we could provide that customer service. And we knew we could do it on a smaller scale with the two of us.
Mm-hmm.
We'll see if we can do it on a larger scale, but right now we know we can do it for a small group of clients and they really enjoy it.
Yeah. And and if you take that customer service ethos, which I think you guys are doing, and then you look at tools like artificial intelligence, which we were talking about earlier, then I think that you can use that as a enhancer for what you're doing. I don't think it'll ever replace. Well, over time, in 20 years, I'll be retired, but you guys will still be going. But yeah, it will definitely change the marketplace for sure.
Yeah.
But at least right now, that level of just knowing who's on the other side of a transaction, whoever the counterparty is, and having that experience is absolutely critical.
You want to give us the quick overview of what Mente does, and want to give us the kind of the why Mente pitch?
Yeah, well, thanks for asking. Yeah, so Mente is basically a full service private aviation advisory firm. We're not a brokerage firm. We're not a consultant. We're not an appraiser. We're not a recruiter. We do all of those things, but really the idea is to provide best in class advice to our clients. And we do that really by having 4 platforms that we focus on. The first is kind of a strategic planning mechanism where we work with our clients as they're going through the process of thinking about and how to think about aviation. A recent project that we're doing is helping with someone sort through 91, 135 and the benefits of each, and should they put their existing airplane on a 135 certificate, and how they charge back internally and how the monies flow. And you can do that really well, and you can do that really poorly, and it can create a big problem if you don't do it right. And so just providing expertise on things like that, to full-blown fleet plans for Fortune 10 companies with 7 airplanes going out and 7 airplanes coming in and a fractional share and all that tying together. That typically leads into some sort of transaction. So we have a fairly robust transactions group that buys and sells everything from cards through fleets. We're not the biggest. We typically do somewhere between 35 and 50 transactions a year. So it's a little bit more boutique-y, but we touch enough different types of transactions to be able to really meet anything that our clients need. And of that work, it's almost exactly 50-50 acquisition and disposition. And then of the acquisitions, it's almost equally split new and pre-owned. We have an ops consulting practice where we start flight departments and audit existing operations and hire pilots and do compensation studies. And the compensation piece right now is a really big deal. That's kind of the problem of the decade right now. And we're working through with a bunch of different clients retention programs to make sure that they're not only compensating their pilots right, but also giving them the tools that they will want to stay engaged with their businesses. And then finally, we've got an appraisal business, and that's kind of new. I think we started it 4 or 5 years ago, and last year I think we did close to 800 appraisals, $12 billion in total appraised value. And so it differentiates our client base, moving it more towards financial institutions, but it also gives us a lot of information that we're able to use across the other 3 platforms. And so that's Mente. We've been in business since 2009, and we've got about 25 employees that do all of that.
You guys aren't busy at all, are you?
We've got a lot going on, and it's interesting. Our transaction numbers this year have been a little bit lower than where we want to be. I think that's just a function of the market, but our consulting business and our appraisal business and our ops consulting practice have been really, really busy. And so that tells me that the pipeline is beginning to fill for third quarter and fourth quarter, because the work we're doing now on the consulting side really sort of leads into transactions later in the year. But yeah, we're definitely off of where we would want to be right now. But that's just part of the cycle of our industry. And I think, you mentioned earlier over the last couple of years how you've seen the customer service element in the charter business change, and I feel like that's just a function of the demand. And I like to use the kind of the word picture of it's really a rubber band that was stretched to sort of its max, and if you stretch it any further, something was going to break. And in our world, you can't allow that to break, but it was pulled as tightly as it could possibly be pulled. And now some of that pressure is being relieved a little bit. And the question is whether or not, when the rubber band sort of comes back to normal, if it's going to be wobbly and misshaped, or if it's going to come back and snap back to what it looked like beforehand. And that's where the real question is, and we're trying to figure that out. But I do think that there were enough sort of demographic changes and psychological changes and financial changes to people through the pandemic that when this thing comes back together, it's not going to look like the rubber band that was originally stretched out.
Yeah, I think we'll see what people's appetite are for different parts of the industry, and programs versus ownership. I think that'll be really interesting. I definitely don't have a crystal ball, so I'm just going to I'm sitting along for the ride here.
Yeah, well, none of us do, and because if we did, we'd be flying in the planes, not doing what we do. But I do think that there will be a change, and it's the other question is, of all of the demand that came into the market over the last 2 years, how much of that's going to stick in the industry versus erode? And I think there's going to be definite erosion, and it's just a question now of how much. But if someone flew privately for the first time in 2020 or 2021, 2022, and they were flying 25 or 30 hours a year, will that stay at that level, or will it decline down to once a year they'll fly privately and the rest of the time they'll deal with the airlines? And I think that's more of what we're going to see. I don't know if it's going to be a 60% reduction or 30% reduction, but I think we'll see it normalize a little bit. I think the industry needs it. I think that what we saw for 2 years is absolutely unsustainable.
Yeah. And I just think the industry wasn't providing a great service to its client because it had a hard time.
Well, and it's interesting because we during this whole process of starting the new company, we created an M&A team inside the business. And last year we looked at 46 different businesses to acquire. And of those, we did one transaction.
Wow.
And a lot of the businesses that we looked at were those sort of floating fleet model management companies. And not saying that all of them were this way, but typically you'd see $200,000 of income in 18 and $400,000 of income in 19, and then break even in 20, but then 2 million in 21 and 5 million in 22. And the interesting thing is that they were doing it basically with the same tools. Mm-hmm. And so as we sort of dug into those, in a lot of cases, not in all, but in a lot of cases, the planes were tired, the pilots were tired, the staff was tired, and they were just trying to keep things together and hope to try to sell on the previous 2 years of earnings from a multiple basis versus looking at something that's a little bit more sustained. And so I think that there's some normalcy that's going to come back into the M&A space. But you can't base valuations on the last 2 years exclusively. Otherwise, I just don't think it's a realistic expectation of what's out there.
Yeah, acquisitions are something that's really interesting for me because I really want to find some good fits of people that, are older. They want to probably exit the business over the last 5 years. And if they didn't exit, this or last year, their value is just going to kind of continue to go down. I would love to get into the space where, I'm, partnering and acquiring some of the smaller brokerages, some of the smaller operators that, that want out of the business. Because theoretically, we're going to see a big transition of people that are hitting that age where they don't want to be in this business anymore. I mean, it's not an easy business to be in, especially on the charter side. I mean, the charter side's a grind.
Yeah.
and airplanes are a grind. But I'm always concerned about, especially with some of those floating fleet operators that either purchased or have a lease over the last, if they purchased an airplane over the last, 2 or 3 years, they purchased at an airplane cost that was probably a little bit higher, but their P&L worked out based on charter rates that they were getting over the last 2 years. Now, as those charter rates decline, what's going to happen to those P&Ls? And can they run a profitable business? And if not, theoretically, they start moving those assets, those airplanes, back into the used airplane market space. And then what kind of effect does that have for airplane values? So it's like it's kind of like this balance, right? So they can't get the rates that they wanted to before.
Mhm.
So then they're going to move a couple assets back in. That's going to drive down the cost. Theoretically, eventually that cost gets to a point where then someone else can go purchase that asset and make money off of it, right? But how long does that take for that to happen?
Yeah, it's really going to be a function of each one of those companies, and I think you're right. I think you're kind of spot on in terms of the potential of what could happen, and I hope it doesn't, because I think and really I was talking to an operator last week, and they were mentioning that they were dropping charter prices in order to keep their airplanes moving, and I thought to myself, hey, we're doing this to ourselves again. And frankly, even at the rates that we saw towards the end of last year, 21 and 22, the charter rates still don't pay for the full cost of the airplane. And so, said differently, owners of airplanes are subsidizing other people's use of their plane. And until we get more pricing discipline in the marketplace, I firmly believe that it's going to be harder for some of these fleet operators who have the capital invested in the airplanes to make it work. And we're seeing that in big ways and in small ways, kind of across the board. And so you have to have a way to have the capital shared. And basically, we call that an availability cost here. Someone has to pay the availability cost, because right now it's impossible for operators to overcome that, given the capital structure of what's going on.
Well, talking about some of these larger operators, what's the fallout if one of these larger fleet operators goes bankrupt? Like, what are the things that you see or you predict will happen?
Yeah, I look, everybody that's running these fleet operating businesses, the ones that are at scale, are really smart guys, and they will figure out ways to make the business models work. There may be cases where a company has to go through a bankruptcy in order to restructure debt, do some of the things that they would have to do in a bankruptcy environment. But I don't think that we'll see any of them go away per se. They probably will change, but I don't think that they'll go away. And we're already seeing in some cases where companies are making strategic decisions to sort of change their operating footprint and how they model and what they do. And I think that that's a good thing. And what's really interesting is that in the environment where most of these companies started, the idea of broadening the base of the pyramid. If you think about the usage pyramid, the idea was to broaden the base, to get more people in. I think they did a good job of that. It's just that structurally over the last 2 years, we have seen massive amounts of inflation in our product. And so just from a cost basis of pilots and insurance and maintenance and fuel and hangars, every cost that's embedded in this system has gone up. In my mind, reducing charter rates right now at the operator level is not the right thing to do. If anything, we need to kind of keep the rates where they are. But I think that we're going to go back to kind of a 50-year-old way of managing this business, where when I say 50, that the aircraft charter business really sort of came of its own in the early 70s. So, I think I hope we don't see it, but I think we are going to see where we're going to compete on price and not on service offerings, which is where we should be.
What do you think should go into a charter rate? When you look at a charter rate, what do you think is maybe not what is in it right now, but if you had to start this all over again and it was, 1970s and you were building a charter rate, what are the costs that would include in that charter rate?
Yeah. Well, I mean, look, if you think about the car rental market, which really that market's getting upended right now in of itself. But I think, Uber and some of the other things that are changing that. But in the car rental market, you factor in the cost of capital, you think about the fixed cost and some of the variable costs, and then your overhead and labor to run the car rental business. And then you price your product to the point where you can make a profit. In our world, you got a variable component to it. So you got fuel and maintenance. You've got a fixed component to it: pilots, insurance, hangar, program systems, subscriptions, and then you've got a capital component. And what's most people, the messaging that exists in the marketplace is that you're never going to make money chartering, but you'll offset some of your fixed cost. And when I think about that, what you're saying to an owner is that, you've bought a plane and you've taken all the capital risk, and you've hired pilots and you've taken on all of the personnel risk, and you're going to let someone else use your plane, and you're going to basically subsidize their use of your plane. So the person who takes no risk is going to get the benefit of the transaction. I had a very wealthy, successful hedge fund manager, when I sort of laid this out to him, basically said, Brian, I'm not going to buy a plane. As long as people are going to make this trade, I'm going to take this trade all day. And today he still charters. And he's probably worth $20 billion. And so the point of that is that if to answer your question, I would have absolutely factored in the fixed component of it, absolutely factored in the variable component of it. The capital component can be argued either way. But instead of just trying to offset some of your fixed costs, I would try to offset some of my capital burden, and then make a profit at the same time. And so, it's, to me, the charter rates are still probably 20 to 40% below where they should be realistically.
It's interesting.
Yeah. And when you look at companies that have aircraft, that have them in their fleets, they're charging that much in order to make it work. And they're dealing with the complexity of operating airplanes all over the country and all over the world, that, and they're assuming a lot of risk in the process of building these businesses, and the customers should be paying for it because they're the ones who are benefiting. So I think pricing on the charter thing right now is the absolute wrong way to go, and it's absolutely happening all day.
Brian, I believe that you started year one in 2009 with something like 12 transactions, and hearing, that although it's a lesser number than you're saying that is desired right now, or kind of against metrics, seeing that evolution in now, especially getting the data behind appraisals and being able to just work through that much metal and really understand, what do you see as kind of some surprising, I guess, anecdotes or something along the lines of when you first started the transaction side, and now you've got all of these data points from the appraisal side? What surprises you the most on what really drives value in the used market of airplanes?
Yeah, I mean, value is fundamentally, our market's no different than any other, and it just goes back to supply and demand, and it's a very simple equation. What's interesting to me is, when airplanes are born, they're effectively a commodity. Meaning, when an airplane comes off a Gulfstream assembly line, it has 25 hours just like the next one. Now, the paint may be one color and the interior may be a different color, but the airplanes are very, very similar. And what happens through the life cycle of the airplane is that they become less of a commodity every day that they're flown, and whoever the operator is who's operating the airplane. However, as an industry, we try to commoditize them as much as possible, just sort of simplify that. And I still don't think as an industry we've done a really good job of getting our heads wrapped around some of the non quantitative aspects of aircraft. And when you look at an airplane that's operated by a Fortune 25 company that has basically unlimited resources to maintain and operate the airplane and do it at the very, very highest level possible. And you look at an airplane that may go somewhere in the world that doesn't have a sophisticated system. When those airplanes come back into the States, there's the one airplane that's operated by the Fortune 500 company will have a intrinsically higher value, but in a lot of cases, it's not really achieved when they sell the plane. And so that continues to be an interesting phenomenon. The other one is just how much more elastic pricing is in the pre-owned market than it is with new transactions. And yeah, I want to applaud the OEMs. Through this last upturn, the OEMs were significantly disciplined. Now, a couple of things going on there, but their pricing was disciplined, and the number of units that they were offering into the marketplace didn't grow substantially like it did in 06, 07, and 08. And so, now part of that was constraints from the supply chain, and we get that. But I think from a pricing standpoint, the OEMs are very disciplined in the way that they incremented pricing up versus the pre-owned market, and we're beginning now to see the pre-owned market, come down. We won't go back to pre-COVID levels. We're going to be at a level above that because if you look at historically where we were pre-COVID, there was no better time to buy an airplane than then. And we had never seen, like every other asset class, there had been some sort of recovery in pricing from 08, 09, and we didn't see that as an industry. I think that we're going to level out somewhere above 2019, but there's still, some pressure downward and how far that goes, I don't know. But the OEMs, the pricing was much more consistent, which was a relief compared to what we saw in 06, 07, 08, for what they did, and so I think that that's a good thing. So those are probably the two, it's just the elasticity of the pre-owned market and then the commodities or the decommoditization of the product and how little that's factored in.
With the pre-owned market, are you advising clients to stay on the sideline? Says, hey, I really want to buy an airplane. Maybe you've had a client that had sold a company at the beginning of the year and would like to buy an airplane at some point this year. Are you letting those clients know, wait another couple months? Are you kind of wait and seeing, or if there's a good opportunity, go for it?
It depends. I mean, if someone's got an existing airplane that's servicing them well, and they're trying to take advantage of some tax savings, they're going to need to execute this year. So there's not that rush. And in that case, what we've told our clients is let's build a plan, let's be extremely patient, and when we see the right airplane at the right price point, then we need to execute. And you can try to market time, but this, the asset is going to be something that you're going to put your family in. You're going to put your business associates in. And so it's not one of those, this is not it's not a commodity. And so you can't treat it like pork bellies or the stock market. It's going to be an asset that you're going to use and you're going to enjoy. And so no one wants to ever overpay. But market timing is not something that we advise. It's more be ready. Let's look for the right airplane and let's be very selective. And when the right plane comes on at the right time at a price point that we're comfortable with, then let's go execute. And that's different than just kind of a wait and see attitude. And part of that's getting the plan in place so that when you do execute, you can execute violently, and quickly, because time is important in a transaction. Violence is not wrong word. That's more of a military term. That's the Army coming out of me. But you want to be able to execute really, really fast and very efficiently. And so that's what we're telling our clients to do right now. So on the other side, if you're selling, I think it's massively important right now to make sure that the valuation of the asset is set appropriately. And we can't trade on data that was 3 months ago or 6 months ago or what the market was in 2022. You got to be realistic in terms of what the airplane's values are today, and price them appropriately. And you know, we've seen in the marketplace where people sort of missed kind of a price point, and now they're chasing the market down, and that's never a good feeling from a seller's perspective. So you know, our goal is with our clients to spend a lot of energy up front making sure they understand not only what the cost is of the airplane or what the price is that it should clear at, but also if they hold it, what's the cost of holding it? Because you're talking, you know, hundreds of thousands of dollars a month. Not, you know, it's not like you miss the market on your, you know, Mercedes and you lose $3,000. It's a significant holding cost. So really just understanding that and then building a plan around that to go execute is important.
Brian, I think a lot of people in the industry have focused primarily on crew and all of the price fluctuation and all of the emphasis on that. But when you talk about your businesses and all that you guys have going on, I think one thing that's really interesting is how disciplined you probably have to be with talent as well, because you're dealing with such a specific clientele who's very sophisticated, who's intelligent. They know what they want and they want you to help them get there. How have you kind of thought about the diversification of all of your world and getting the right people around you and attracting new talent and retaining that new talent? So I guess the question would be, you know, obviously everybody's focused around that on cruise right now, but I also think just as an industry, it gets overlooked of how do we get a bunch of really smart, really driven people to help, you know, see flourishing businesses like yours continue to grow and succeed?
Yeah, that's a great question. I mean, look, our consulting business, we spend a lot of energy right now with cruise. And we work really, really hard to make sure that we're giving good advice in terms of what compensation should look like. And in fact, I think that right now that's probably one of our best products, because you can build a compensation strategy and a retention strategy around, and really what you have to do there is look at, you can't just say, and I internally, when we talk about our pilots, I try to caution our team from doing that, because again, you don't want to commoditize our talent, because each person has a different requirement for where they are in their career. You know, and someone who's 58 has got a different decision matrix than someone who's 38, and then thinking through that and how all that fits together and keeping things balanced is really important. So that's something we've got ongoing right now. Internally, I think the most inspiring thing that I've seen as our business has grown is the talent we're able to attract and retain. We have an exceptional team, and you know, part of that is the compensation program, but part of that is giving people a really good place to work. And we spend a lot of energy, you know, trying to create an environment where our team can be successful, and listening and trying to provide the resources, and then allowing our teammates, you know, we've got an exceptional team, and giving them the authority and the responsibility to make good decisions, you know, at the point of impact with a client. You know, and you guys, you own your own firm, and so, you know, when you're on the phone with a client, you can make a decision very quickly, because you're kind of doing the process in the back of your head. Okay, if we do this, this is what it's going to cost us, but it's a good client, I'm willing to make that investment. And we want to try to encourage our employees to do that real time, because nothing is more frustrating when you're dealing with a principal where someone says, well, hey, let me go check with my boss and see what he says. You know, that's we want to empower our people to be able to do that, and that's absolutely critical. You know, the other is just trying to create an environment where employees are valued, and you know, really, it's important to me that you know, we treat each one of our employees like a member of this, you know, the family that we're creating. And I don't want to get like squishy on family stuff, because you hear that, and sometimes I think that sounds a little bit weird, but you know, it kind of goes back to the golden rule and treating people the way that you want to be treated, and being smart enough to be able to look at things through their eyes, and that empathy that comes with just sort of understanding their situation and making decisions that way. And it's a tough balance because the business has to be successful, but you've got to have the talent to make it work.
Yeah, it's managing the business more than just a spreadsheet, right?
Yeah. I mean, this business is managed by spreadsheets like every other one, but it's also managed through the hearts and minds of our employees because we've done a really good job of hiring really good people and that are committed to clients and focused on excellence and making sure that they operate as team players. And it's we don't ever want to disrupt that if we can avoid it.
I'm super interested in the used airplane and the values of used airplanes. And theoretically, there's probably a few airplanes that are performing better with values, that are holding on values. Do you see, what are the airplanes that you're seeing that are doing a great job of really kind of holding firm on values? And maybe what are some of the airplanes that you might see there may be some opportunities where, the values are going to get to a point where they're going to be a great buy?
Yeah. Again, generalities are really sort of, what we see is each individual market has its own characteristics, and so like I would argue right now that broad brushstroke that the light jet market is still doing a fairly decent job of holding its values, and we're seeing activity there.
That's what I was going to think. Phenom 300 has
Right.
still done a great job of like holding on to those values, right?
Right. But when you move kind of up the capital chain, I would say that it gets a little bit more sort of model by model dependent. And it'll be interesting to see how that fleshes out. I mean, I think
it's probably inventory dependent too, right?
Say again?
It's probably inventory dependent too, right?
It is. And so, like for example, the G550, I'm a little biased. I think that airplane is just a great airplane, obviously no longer in production.
That's the airplane. Like I'm waiting for that airplane to get to 10 million.
Yeah.
How long is that going to take?
Exactly. So the airplane's great. It's a great airplane. It's insanely reliable. A year and a half ago, there were probably 12 airplanes at best in the marketplace. And most of those you wouldn't want to buy because of just either damage or pedigree or something along those lines. Today, I think there's closer to about 50 that are in the market. And, the pricing though isn't reflective of the number of units. And the issue there is that within markets, there are also markets because take, for example, the G150, it was only manufactured for a short amount of time and then they stopped the production. The 550 was in production from 2003-4 to 2020. So within that market, you've got, 17 years of airplanes. And so, if you want, we've got a search right now, if you want a 2017 or newer Ford Galley airplane, I don't think that there's one in the world that exists. So that buyer and that seller have a different conversation going than if you want a 2006 Ford or Aft Galley with 5,000. Then you've got 10 airplanes to choose from. And so it really, even within a market, there are sub-markets. And that's where, and I'm kind of touting my own horn here, but that's where you need a professional to be able to help you sort of navigate that. But there are certain markets right now that are going to struggle. I do think that if we see a continued deceleration in the market, that older airplanes are probably going to get hit first. And so, there was very little life left in airplanes manufactured in the 1990s timeframe, pre-COVID. And then, those airplanes started selling like crazy during COVID, just like everything else. And it was because it was what was available. I think that those airplanes will be the first to take an impact, and then it'll kind of, so regardless of size, if it's old, it's going to be hit first. And then I do think though that what we're seeing right now is that there's probably going to be a little bit more pricing pressure at the top end of the market, and it's going to work its way down to the light jets. But that's just what we're seeing right now.
When as you kind of are focused on this market, and I kind of want to transition this into talking about your Freedom Program a little bit. And I'd love for you to kind of explain the Freedom Program, but also another question would be, as you're looking at clients that want to get into the Freedom Program, is there some airplanes or some clients that probably aren't a good fit, and what are the clients that are a good fit?
Yeah. So the Freedom Program was really designed, again, through a conversation we had with a client. And the idea behind it is that if you think about what our industry does, we manufacture and sell airplanes, and then we operate them. And everything that everybody else does supports those two things: manufacturing and selling and operating. And everything else supports those two fundamentals. And there are clients out there who, most of our clients value, the three things that they value most are safety, reliability, and customization. And you can get safety. I think that the industry is generally very safe. Generally, it's pretty reliable. I mean, over the last couple of years, the band's been stretched, like we talked about, but it's pretty reliable. But customization is something that you can only get through buying an airplane. And a lot of times our clients don't want to buy planes. So as an industry, we're selling a product that our clients don't want to buy. And so that's the fundamental premise of what Freedom is. And then, so the idea behind this then is to create, and what we've coined is a new term called corporate jets as a service. So the idea is that you have access to a corporate jet, but instead of having an ownership model, it's a service model. So from a contract standpoint, there's a monthly standing charge, and then there's an hourly usage fee. We do a contract over a period of time, but embedded in that contract is basically an airplane that's customized to what the owner wants. The crews are customized to a delivery model that the customers want, and the location is geared around primarily a customer. Now, we have access to the airplane. We can use it for other things. We can charter it if we need to. We can let other customers use it. So we still have operational control over the asset, and we basically control how the asset's used for profitability. So then we can keep it on our balance sheet as opposed to being on the customers. And they then get basically access to an airplane that's customized to their needs in a model that's off balance sheet. So when you sort of take a step back, there's no residual risk, there's no balance sheet exposure, SEC reportable goes away, IRS utilization becomes limited, the pricing becomes fixed, and it only varies based off of utilization. And so it eliminates all of the risk and a lot of the optics that are associated with owning an airplane. Then we provide that customized delivery model back to the owner. So that's the idea. And people ask, how can we do it? And really sort of the core of what we do, we've been doing aviation business planning as a kind of a core competency for 20 plus years. And we've built some incredible modeling capability, and we just understand cost structures and things like that. And so because of the detailed planning work that we've developed on the Mente side, we're able to sort of repackage that into a delivery model for our Freedom customers, and really solve a lot of the issues that exist today in the marketplace. And what's crazy, we were going through it, and we were talking about different things that people would buy, and one of the things that people will buy is simplicity. And so we were brainstorming how we could create a model that's simple. And as we were going about it, we kept talking about, well, you don't have to do this, and you don't have to do that. And I stopped our conversation and said, hey guys, let's take 15 minutes and let's brainstorm how many contracts you'd have to enter into to buy an airplane, operate it for 5 years, and then sell it. And so in 15 minutes, we came up with 65 contracts that you'd have to enter into to own and operate an airplane. And when you think about that and you kind of boil it down, as an industry, we've made it very complex to access what our clients want. And so what we're trying to do is simplify that into one contract.
As we see, theoretically, if markets start to feel more downward pressure, and especially publicly traded companies that own airplanes, that's definitely one of the early things that they feel pressure from shareholders. Do you see that as a big growth opportunity?
We're focusing on several different segments. Public companies is one, and it's interesting because when we were developing our business model, we were talking about aircraft management. I think as an industry, we talk about aircraft management. And really, when you think about the highest and best way to deliver aviation is has been and always will be through a flight department model. And what we've done internally is really created a flight department management company, not an aircraft management company, and to build teams where the front end is geared completely around supporting the customer's needs and wants, while the back end of the business is very, very systematized and the same. And so, we're in the process now of creating standards and how all this stuff is going. So our standards teams are working and getting all that built out. But really focusing on this flight department delivery model. And the idea is then if a Fortune 100 company needs to outsource or wants to outsource, instead of going into an environment where the planes move around, they don't know who the pilots are, and it's you lose a lot of control. And the reality is that the delivery model begins to suffer. In our world, we can keep all of that the same and create this flight department delivery model so that it's geared around that. So, I mean, our segments are the same segments. It's high net worth, it's Fortune 500, and it's existing fractional and program owners. And we think that we've got a superior model.
Incredible. Brian, I think Dan and I certainly look up to you in a huge way as, somebody who's been a trailblazer in so many different aspects of the industry. And selfishly, this is a great opportunity to kind of ask, it hasn't been that long since you started Mente and you've really grown this. I'm sure it feels a lot different from your perspective, but it's been just incredible to see what you and the team have been able to build with all of these programs and businesses. Okay. How have you been able to manage the early days? And I know that, it sounded like a couple of credit cards and about, $100 in the pocket and a whole lot of, I think scrappiness and discipline to just get things off the ground. How is that translated into now? I imagine that you're battling time and focus and concentration just across all of these kind of horizontal items. Describe that a little bit and how you think it can be done well.
That's really insightful. I mean,
pointers.
Yeah. So first of all, thank you for saying that. It sometimes doesn't feel like that. We've been able to grow and it feels like that we're in a really good spot right now, but there's a lot more work to do. And what made us successful early on is different than what makes us successful now. And so, we've been blessed in a lot of different ways and, lucky in some cases, and, all of that sort of plays together. We've also got great people and great clients. So, that's part of the whole equation. But, I think for me personally, I've had to sort of fundamentally change as a leader. And that's been hard, and I fail at it every day. But, what made us successful early on, and sort of that drivenness and that desire to, make sure that we meet our clients' expectations, that hadn't changed. But really how I kind of go about it on a daily basis has. And managing projects versus managing people are two different things. And so before I was much more of a project manager. And now it's really much more about being a resource provider and making sure that I'm getting the right resources to the right people at the right time, and not overburdening the business with too much bureaucracy and crap, because that can come as you grow. And it's imperfect at best. But I can't overstate how important it is to hire good people. And to a person here, it's funny because we look at our people quarterly and we evaluate how they're doing. And our team, we don't have any sort of rotten tomatoes or rotten apples that are messing up the whole basket. We've got a bunch of really good people that are pulling hard in the right direction to really try to focus on our clients and deliver for them. And so I think as y'all's firm grows, you're going to have to grow and change the way that you lead. So that's one, and just being aware of it. I think two, hiring really good people and really investing the time to make sure you hire the right people as you grow. And then three, I think it's never losing focus of the client. And because at the end of the day, that's who we all work for. And, and I would say, we made some mistakes along the way. We're not perfect, but we tried to hold true to those three things.
I think we'll try and I'll get one more question, and Austin get one more question. Who, for you, who was the first person you hired and how'd that go? And who's the first person you had to fire?
Oof. So when we started the business, it was a little bit, I was working with another firm and they closed the Dallas office. And so, we started really just kind of going forward. And then within about 26 days into it, we closed our first transaction. And then within probably 3 months, we were able to hire back some of the team that we had worked with previously with the other company. And so a lot of those people we just kind of knew. And it was fit. I don't say it was easy, but because it was kind of like giving birth to a teenager, but it was, which that's not a pretty sight, but just because we had a lot of growing pains early, but we knew most of the employees that we hired early on. I can't remember the first person we fired along the way. I don't. Looking back, I can't remember who that was.
It's probably a good thing.
Yeah, I'm still imagining giving birth to a teenager. That's gonna stay. That's gonna stay with me for the rest of the week on this one. Thank you for that, Brian. A little bit of a softball one for you, but what are maybe your top 1, 2, or 3 Brianisms? Drop some real knowledge on us.
We're never hiring. We're always looking for talent. That's probably the one that we say the most around here.
What's everybody's behind your back? What's their favorite that you're always saying that they're repeating?
Yeah, there's one that I can't say. It came out in a fairly heated moment, but I'm just trying to remember. There are so many, and they just kind of pop out. So as I think of them, I'll let you know. But I think the first is we're never hiring, but we're always looking for talent.
Well, I think we're gonna have to follow up with the staff and get them to start writing these down.
Yeah.
And then we'll post.
If you know Jim Lewis, ask him, but you can't publish it.
Deal.
Brian, really appreciate it. Thanks for spending the time with us and dropping some great knowledge. If anyone wants to get in contact with you for any of your services, what's the best way to do that?
Yeah, so probably the best way would just be to reach out directly. My email address is Brian, BRIAN, at Mente Group, MENTEGROUP.com. That's the easiest way, and I'm fairly responsive there. But if just look on the website and call the office, and our team always knows where I am, so you can get in touch with me. But I appreciate that.
Awesome.
And Dan and Austin, congratulations on what you guys have built. It can be a very difficult thing to start and grow a business, and it sounds like you guys are off to a good start. So I'm really excited for you.
Well, you know what you said. One of the things that really resonates with us is a lot of the client first. And we started with only a few clients, and I don't want to say they're like gold, but they're just everything we focus on. And that's how we kind of started the business. It's all about the clients. And we truly felt that if we could just be all about the clients and not about us or the company, and that's how we make a lot of our decisions of, all right, well, what's the best for the client? And if we just kept making those decisions, and sometimes those are tough decisions, like losing money on things and knowing that, oh man, like the business, it's going to hurt the business, but in the long run, it's the right thing for the client.
Mm-hmm.
We knew that on the long run, we'd be more successful. Those are just sometimes there are super hard decisions to make. And I think those are harder when you're at a much larger company to make those decisions. So it's nicer that we can make those decisions, but they hurt a lot more when you're losing your own money versus losing someone else's money. So
and that nimbleness though is something that will allow you guys to be successful. So I'm excited for you. That's it sounds like that you guys are doing the right stuff the right way. So that's exciting.
Well, awesome. Well, Brian, thanks again. Really appreciate it.